the chop is turning into more of a bit of a clear downtrend today as we move into the latter portion of it. I see PLTR down 5%, SQ down about 9%. Wow, some big falls happening here. What's going on, Brian?
Microphone's off. I fall for that every time.
You're all good. No worries there.
Doing well. What's a super follow on your Twitter I see you have now?
Yeah, it's Twitter's attempt to break up something like a Patreon or other pro services. It basically allows people to subscribe to you, and then when you post, you can post only to those people. However, I don't really offer more posting content. For me, a super follow is kind of a way to, I guess, when you click on it, it says what I offer for people that want to check out the super follow. The few things that it offers is like fast responses through DMs. So if somebody perhaps like, obviously, I'm sure Brian, you can relate. We get a lot of DMs.
I have
It's
my
hard to get to all
DMs
of them.
turned off, actually.
Oh, okay. I get a lot of DMs. It's hard to get to all of them. There's a lot of good questions and pieces, but for people that are super followers, I'll always get to that DM, open that DM, things along those lines. And then I also offer stuff like I'm much more likely, like if we're doing a space where we're bringing up people for questions, I'm always very hesitant with a lot of people, right? There's a lot of like people just spamming out here. So I'm much more likely to bring up someone if they're a super follow as well, bring them up, let them ask questions. I built some good relationships with people through it.
Cool. I've never, I don't think I've seen it before. And it's funny, I only see it on my phone, not on not on twitter.com.
Yeah, it's only for mobile right now, I believe.
Ah, okay.
Yep. And basically, Twitter lets you set like a price. I think I set mine at like 4.99 a month or something, so nothing too crazy. And yeah, I mean, just have some good relationships. I don't have that many right now. I think I have like 13 super followers. Um, but like with the people that are, it's kind of cool that they have that interest and that they support. And then a couple of my just like friends support kind of through it. But I see them regularly interacting, and when they comment on my stuff, it says super follower on it. Yeah, it's a feature.
That's awesome. Cool.
Yeah. I'll put this out there. It doesn't make me bullish on the Twitter stock. It's not
Right.
exactly changing, not exactly a game changing of my thesis.
Yeah, nothing makes anyone bullish on that stock.
Haha. Well, let's start talking about the market here. So last week, we had this space on Thursday, at which point SPY was pretty much exactly where it is, I think. So Wednesday, Tuesday, I'm just looking at a few candles. Monday, I guess it was a little bit higher even last Thursday. So it seems like we're breaking a little bit to the downside here through the latter portion of this day. So Brian, would love to give you the floor to start us out with a little bit of overall market sentiment, where you're feeling right now. The thing that I've been looking at is from these recent lows back on the 20th, we are seeming to be coming back down to that anchor VWAP.
Yeah, we're just about to touch it in the SPY, actually. We broke below what's been the low of this recent range. I posted a chart just leading up to this with the SPY, the Qs, and the Russell 2000 on three different time frames: the weekly on top, daily in the middle, and 15-minute time frame on the bottom. And you can see we broke the bottom of those ranges in the S&P and the NASDAQ just now since I've posted that. And the path of least resistance overall, we're still in a primary downtrend. And, we anytime we get these bounces, we look to the market and say, is that it? Was that the low? And, one of these days it will be. But it doesn't mean it's going to be a V bottom. We've spoken a lot about that. We don't have the monetary policy supporting this market anymore. So a V bottom is much less likely to occur. It's going to be more of a, longer term, stage one accumulation. And we've still got to get out of the stage four decline before that ever happens. So it's, we're still guilty till proven innocent. Markets bounced from important levels. The COVID VWAP for the SPY, the 2018 VWAP for the Q, and prior resistance for the Russell 2000 on the longer term timeframes. Now we've been quiet for the last 2 weeks in this range. Now we're breaking that range, and like you said, we've got the VWAP from the lows just below. I'm not, I'm short some here of the cues actually, and I'm probably going to just keep it as a day trade for today because we've got, the big catalyst tomorrow, which is the CPI. I have zero opinion of what the CPI will be. I have zero opinion of what it will do to the market. I know it's going to be a big catalyst that a lot of people are talking about. So to me, I would be foolish to, hold a market bet. Uh, in advance of that because as we know these things it's a coin toss. Now if you're a believer as I am that news and surprises follows the trend, I think you've got a greater likelihood that we see a sell-off in the market. But to me, when it comes to risk management, I'm not willing to bet that we continue lower. I'd rather cover my short today, take my gains, and if I miss a move, I miss a move. There'll be another one. I know that there's always another move, especially for my time frame. That I don't need to get locked into trying to be smarter than everyone else and predict what the CPI is, what the market's reaction will be, and what the Fed does about it next week. So we're in a market that you either should be sitting on your hands or focused on the shorter term time frames, and most people I think should be just sitting on their hands.
When you speak to the shorter term time frames, can you dive a little bit into what those are for you?
Well, for today, anything that I've put on today is just going to be a day trade simply because, as I mentioned, we've got this big catalyst tomorrow and I don't want to have exposure to it. We're getting a very nice little collapse here and I'm making money as this happens. And I could, get excited and say, that's it. That was the peak. This bounce is over. And maybe it is, but I'm not ready to, I'd rather be in the safety of cash overnight than come in and see the market, gap from, the Qs could gap from 302 where they are now to 307, and I could give back all my profit, and I'm not interested in that. This is a singles and doubles market. We've seen all these, there's so much volatility that nothing lasts for very long in either direction unless you're willing to really just hold on to your shorts for a longer period of time, meaning 3, 6, 9 months, and that's not my time frame. So so now it's my entries come off of a 1 minute chart. I'm aware, of course, of all of those time frames that I've just posted there. I'm aware of where we are in the weekly, the daily, and the 15 minute. I know that on the Russell 2000 we're at the declining 50-day moving average. We're at the volume weighted average price from the COVID low as resistance from the underneath this time. I know that we're at the volume weighted average price from the March high, and we're at the prior support, which is acting as resistance. So we're supposed to fail in the Russell 2000 here, and it's begrudgingly going lower here just the last 2 days, but we're at recover, this bounce highs here just on Tuesday. So, you can't get locked into a belief for too long is my main thing. And that SPY is now touching on that VWAP from the year low right now. So to me, that means get ready if you're short the SPY to look for this as a potential level where it might get a little bit of a bounce.
Okay, perfect. Brian, appreciate the initial insights there into what's going on in SPY and the Qs. Yeah,
In Qs, I'm covering some right here at 302.51.
I just going back to the time frame that you mentioned last week, you talked about using that 5 day a lot on the 65-minute chart. Was that correct?
I use it on a 10-minute, 15-minute, 30-minute, 65-minute. Yeah, just intraday time frames, but yes.
Got it. Perfect. Okay. Something that I have been watching a little bit more there as well. Awesome. Richard, I'd love to bring you into this as well. Get your thoughts on kind of where we are here on SPY and the Qs, as well as any moves that you've been making over the past week.
Sure. Great to be back on again. Basically confirm a lot of what Brian just said. I was pretty optimistic early on, especially late last week, and then into the beginning of this week, things seem to be firming up. Leadership seemed to be expanding a little bit, but then we got some reversals. And if you look at kind of the shipping group, that's a group overall that I was looking that was acting pretty strong. They're forming bases, but then we saw some breakdowns. especially in Zim that had that gap down. We saw GRIN, GOGL fail as well, SBLK. And overall, things are weakening a little bit. If you look at the mega caps, if you look at Apple, Amazon, those are all pretty much at their lows and kind of undercutting the swing low from basically that Tuesday reversal after the gap down. And things are definitely weakening a little bit. In terms of what I've kind of been trading recently, I made a lot of moves actually last Thursday before we got on the space. VTNR, I bought Sedge, ENPH, two solar names. And basically, I've sold half at this point, and I'm kind of watching the 10-day moving average for the remainder of the position. And the solar names are holding up a little bit better than a bunch of stocks right now, but if they continue to weaken, there's no point in holding on to a stock that's going down and breaking my expectations. And I won't let it turn into a green to red trade for sure. And I've already sold half to kind of ensure that. I also tried LRN yesterday. Pretty much right at the open, bought it as it was pushing up on volume. That reversed pretty hard. It didn't kind of do what I'm expecting it to do. If it's going to be a fall through on the breakout where it pushes up on volume, goes kind of tight. If it does pull back, it kind of does it in an orderly manner. It pretty much completely reversed on the intraday timeframes, and very quickly I had a pretty small loss on that, and that turned into a pretty ugly day, breaking the low of the previous day and all the way back down to the 50-day, and now it's undercutting that 50-day. So we've seen some pretty wicked reversals like that recently. Another name that's similar, AMPH. This had a really nice breakout on Tuesday the 7th. Then a pretty wild day the next day, not what you want to see after a stock has a super strong breakout like that on enormous volume. And then today it's completely fallen apart, down 21%. So not promising action there. And in terms of the leadership groups and kind of the breadth of that leadership, it was looking promising, and now we're kind of seeing reversals of that trend, and not exactly what you want to see if you're hoping for a continued sustained rally. That's not just a bear market rally. So in terms of the overall indexes, the Qs and SPY, we were in this range, basically going sideways for 7-8 days, and now we're kind of testing those lows, undercutting those lows just a bit. And it'll be interesting to see what happens tomorrow, whether we continue to fall through to the downside, or maybe there's a reversal, a gap down, and then because of news, whatever, we see a retake of that range. But I think how we close this week should be pretty interesting. I definitely want to see it hold that range if we're gonna, keep this rally alive. But if we do continue to downside, that's fine as well. Just got to sit back and watch if you're not playing the short side. And look at the SPY, it's pretty similar. Just going sideways for 7-8 days after push up off the bottom. Now we're undercutting the 10-day moving average, the 21 exponential, and we're still below that declining 50 and 200-day moving average. So on multiple time frames, we're just still kind of in a downtrend, resuming that downtrend on the short-term time frames, and a lot of stocks are following suit as they do following the rest of the market. So yeah, not great action to the long side. It was looking promising, but now we're seeing how quickly things can turn apart, and why you have to be so nimble in this type of environment until stuff really starts to getting back above the 50-day moving average, and that can be the start of a new uptrend. But we didn't really see that. We saw stuff kind of build and then fall apart a little bit. And even the oil and gas names, which had been acting super strong, are seeing some distribution. We've seen some gap downs. Oxy, I know, is a name that a lot of people have been watching over the past few days. Like the market, it was kind of going sideways. Now we're undercutting that, intermediate term, short-term range that had been forming, and finishing at the lows as of right now. So not a great look for stocks in general, and I'm sure there's plenty of plays of downside, and that's kind of where I'll be looking over the next few days, unless we get some type of big reversal tomorrow on volume, where a lot of stocks recover those ranges and set up once again.
Okay, perfect. Yeah, I think the volume piece is key. Have you been focused in on just how low volume's been over the past week?
I'm in terms of the indexes, you mean? On like
Yeah,
the
I mean, a
rally?
lot of people are, looking, from,
Yeah.
different people I've been talking with. It just seems like they're not surprised at the lower volume, but I mean, you can look at the Qs and it's just every day this week just been going down.
Yeah, we're getting into the summer a little bit now, so volume will be kind of lower on average. In terms of the stocks I've been trading, I'm making sure that the breakouts are happening on above average volume. I don't care too much about the volume on the overall indexes. We have seen some distribution days if you follow can slim methodology, if anybody listening here does recently, which isn't a great sign, but overall low volume. It doesn't matter too much to me on the indexes. But, playing the individual stocks, you definitely want to see powerful volume to the upside on a breakout as it progresses from your buy point.
Okay, perfect. All right, so I want to talk with both, Brian and Richard here for a second, and just about oil and energy, and because it seems like every single week this continues to come back up, and a lot of people are like, oh, it's overextended or XXX, piece. But the run has seemingly continued. There has been a small pullback right here in a couple of them. Oxy, a little bit down on the week. I think if you look at like MRO, um, that one's even still up on the week, and Chevron and others. So with the sector, we had a space on Tuesday night. We did that with like Jay Woods and JC Perez and a bunch of others. It was just an interesting chat. And we just really talked a lot about focusing in on relative strength and finding the relative strength of different sectors. Brian, I'm curious if you want to go first on this. Are you still playing this sector heavily? It just seems to be the one where a lot of money is inflowing into.
I really don't like to trade the energy names. I'm very consistent about this. But I pointed one out for subscribers to Alpha Trends this week. I pointed two of them out. Diamond Offshore on Monday. Unfortunately, it gapped up and they weren't able to participate in that, or some of them did, but that went from 8 to 10. And then some of them are still in rig from a price of $4.29. We've got a third of that one left. I still look at them, but I just don't like the way they trade. They don't trade like normal names. I don't tend to trade them well. There are still some that look like there's potential there. So, when you talk about relative strength, I think what the problem with relative strength is that by the time people notice relative strength, you've got a stock that's very extended. So if you look at it's a market of stocks, not just a stock market. So I find that I always have an advantage over the people who look at, the market, the sector, and then the stock, because they're looking at a sector that might not have moved yet, but the leaders in that sector have begun to move, but not enough to drag the sector itself. So they don't notice it until a couple days later. So you want to focus on emerging strength and emerging relative strength, but you have to be looking at that group. So if that group is maybe not performing as well, you're not going to notice the early leaders in the group. But now that, that the energy names have, had big runs, the question is, how do you get involved in ideas that haven't made their runs? So earlier in the week, it was Diamond Offshore and it was rig. And now I've got my eye on METC, for instance, which is Ramaco Resources. They're a coal company, and they just had a nice volume push higher here on Tuesday. It's consolidating yesterday and today. It's probably going to need another couple days of consolidation before it does anything. But that's one worth keeping an eye on. I've also got an eye on NRG, which is, in a nice tight consolidation here. And, these guys are, electricity. But, they were up on big volume over the last month. They've gone sideways for the last 2 weeks. They're holding right on the 20-day moving average. They refuse to close below that. And, probably above about 46 and a quarter I don't think you would need more than about $1 stop on this one. That one's consolidating nicely and getting ready to move again. It looks like to me, it's, you look at the weekly chart, it's up near all-time highs, highs from 2008. And, those are the types of names that if you're going to look at them, you want to look at the ones that are, about to emerge from a tight consolidation. And we've got that in both METC and NRG. So those are the types of names that it's not too late. It's not as obvious as ExxonMobil, which is, just in the last month gone from, 80 to 105. So to me, it's always about whatever the relative strength group is, finding the ones that aren't extended but are emerging out of a tighter consolidation and potentially going to go become the new leader in that group as, as people start to take money off the table in Exxon. They start to say, well, I still want energy. What else hasn't really moved? Where can I, get some outperformance? And I think that's what you start to see is that I saw people talking about IMPP today, which is a penny stock energy name. But what happens is when the group has run real far and it starts to get picked over, then the real garbage stocks start to percolate, and then the so-called easy money comes, in those little names. But what people don't realize is that all of the energy names have been picked over. Now it's this garbage leading, and as it's said about the market in general is, when it gets frothy, that you're typically near a turning point, and the froth just means, that the little garbage stocks are the ones that are starting to move. And there's nothing wrong with trading those as long as you recognize that you're late in the cycle for the energy names, most likely, or at least you're late in this portion of the move. And if you're looking at these little garbage stocks, they're not going to be the next leaders. They're just garbage stocks that are bouncing. Trade them for what they are, garbage stocks that are bouncing, and, move to the sidelines. Don't get stuck like so many people will.
Yeah, I definitely agree with you. You have been super consistent on the area of commodities in general. But appreciate you still kind of indulging us with some insights into, the oil and gas and energy and everything that's going on here, because there is so much going on, especially as we are just flushing into the close here. Richard, do you want to kind of weigh in with thoughts on that industry as well?
Yeah, I would agree with all that Brian said. And on this past Tuesday, a lot of these names had really strong pushes and a really great day. But then from that point, we haven't really seen any progression in a lot of these different names, and it's kind of a little bit of stalling action or the start of stalling action. And right now, I mean, energy has been the story for this entire year. Either is the run over? Who knows? Do they just need another base? Who knows? We'll just kind of have to take it how it comes. But at some point they're gonna pause, and when the group really starts breaking down, they'll start breaking moving averages. They'll have false breakouts, all of that. So there'll be those signs of kind of a weakening trend overall. Um, a lot of the energy names still are kind of the strongest to the long side right now. It's the group that's kind of holding on, the best compared to a lot of other groups. And we'll just have to see whether it kind of falls the market to the downside or is holding up well. And when the market kind of resumes an uptrend, it will fall suit. So, yeah, I think the relative strength for the energy names in general almost started on the first of this year. If you take a look at XLE, we had a strong push on January the 3rd up the right hand side of its base, and that kind of started the overall trend. So noticing those things early where overall groups are shaping up and are forming higher lows when the market is forming lower lows, or are holding above moving averages as the market is undercutting them. Noticing those earlier and running those screens and finding those individual stocks within those groups that are holding up well, that's going to put you on those trends a little bit earlier than the rest of the market. But once a stock has made a super strong run, made another super strong run, and then does another base, it's a little bit more in the eyes of the market there, and you're a little bit later to that trend. So you just have to be aware of that and manage risk maybe just a little bit tighter, since those stocks can be whippier. They can be wider and looser if a lot of people have their eyes on them, and just be aware of that. But so far, the energy names continue to trend. They're above their moving averages. Some stalling action recently, but it's just something to be aware of. They're not going to keep running forever. I'm actually going to make a video this weekend on an energy name, SWN, which is acting super strong right now, but I'm kind of focused back during the kind of model book run coming out of the 2000 bear market. It had a tremendous run of about 3,000% in 5 years. So I'm going to be making a video kind of covering that area, covering that time period, and also talk about kind of how it topped and ultimately it rolled over 97%. So it may sound familiar to some of those people who are focused on the tech names recently, but these energy names can run and they can move, but they've already had a tremendous move. So it's just something to be aware of, and watch out for those warning signs. And of course, manage risk always, and watch out for when it breaks that trend.
Perfect. Hey, I do see a couple people that are requesting. If you'd like to participate from the audience, there's a great new easy way to make that happen. If you look in the bottom right of the space, there's a little spaces chat. It's like a comment with a one next to it, and you can go and comment any questions that you have. I'm happy to kind of parse through them there. So Brady and Ahmed, if you want to go ahead and drop some questions in there, that'll be the easiest way for me to go ahead and get that up there. Appreciate that. Okay, coming back into this. So I mean, it's interesting. We're basically at the half point of the year right now in June, almost through. SPY coming down pretty far, other ones coming down pretty far. But people continuously seeming to have a little bit of permeable residence inside of them, and there are areas which I think have been attractive. Lithium and others, and some different pieces. We've talked a lot about different kind of like risk management techniques and other pieces like that. So Brian, I kind of wanted to pull you back into this. It seems like there's a large amount of retail that is sitting on cash, kind of waiting for a turnaround here, and I guess looking to buy, somewhere near the bottom and ride stocks back up, in maybe some type of situation similar to March 2020. What's your kind of opinion to that approach?
I don't like it at all, because what they're trying to buy is yesterday's news. They're still trying to buy Roku and Square and Netflix and things that were yesterday's winners, when there'll be a different group. There always is. In those stocks just don't recover quickly. If they do, you can always point to one or two that will have the V bottom, and that's what everyone's looking for when they try to buy these lows. But if you look at the aggregate, the aggregate looks just like the market cycle, the market structure. It's on average, they're going to look like Kathy will have one or two of those in the ARC fund, but the ARC fund, will not do a V bottom. I will guarantee you that it will not do a V bottom, because there's too much garbage in that. And speaking of that, she just bought, I think, just initiated like a $30 million position in mRNA yesterday, which is just hilarious because it was their first purchase and the stock's down 9% today. Sorry about the tangent, but if they don't scare you out of these stocks, which you should be scared, you should be selling on the way down. There's nothing wrong with, if you're going to panic, be the first one to panic. Don't wait 6 months later until the bad news starts to come out. Bad news comes out at the bottom. Good news comes out at the top. In markets, start to see, market bottoms are hallmarked by low volatility. And again, it's that process of that longer term process of accumulation it's just going to take time. So there's no hurry for those. Buy the stocks, that have strong bases. Last week, the stocks that we spoke about, I've even forgotten them now. And so, ATEN, I got stopped out of that one yesterday. What was that other one? It was really a good one. God, it was like a $20 stock and went to 26. I owned it and I've completely forgotten that. I mean, that's the way I am with stocks. I don't marry them. I'm not interested in, knowing everything about the company. I want to take my money and I want to move forward. But, if you're looking for stocks to buy right now, take a look at CAL. It's breaking higher. It's got a nice tight consolidation. The company just reported earnings, 2 weeks ago that were up 120% on a 15% increase. The shoe store or shoe company, but it's got a great chart here. RFP is pulling back. It's probably going to need a few more days, but this is the type of stock that you want to buy. You don't want to buy the stuff that's in downtrends. You buy the stocks that are rallying, that show strong bases, that are above their longer term moving averages, and look like they can continue to move. I'd mentioned LRN last week, and I got stopped out of that one yesterday morning. I had actually put it on Twitter. I took 70 cents gain on the first third, stopped out of the second 2/3 with a 39-cent loss. On average, I lost 3 pennies per share, but that was $3 ago as well. The one I was trying to think of was SWIR, SWIR, and I think I first mentioned that 2 weeks ago here on this show, and it was $20 a share, and it ran up to 25. I mean, there are winners out there. You've got to be selective, and you've got to be looking in the right places. And stocks that look vulnerable, like MGM. MGM looks like hell right here. You could short it right here with a stop above today's high, and I think you'll see new lows in that one. ARWR looks like a great short. CPNG looks like a good short. The opportunities are out there, but the problem is, I think that most people either don't know how to do the work to find the right stocks to be involved in, or they're just too lazy to do it. They want somebody else to do it for them, and think that they're going to just find out what's popular on Twitter, and what's popular on Twitter isn't the right thing to buy or the right thing to short. It's you gotta no. Anyone who says this, the trading business is easy is a liar. It's hard work. This year, I've been positive. I'm still positive. I'm just off my all-time highs, but it's been a lot of work. I can't remember working this hard, especially for the low returns that I have. There's still good returns overall, but I've worked damn hard for them, and I like it when it's easy. Everyone likes it when it's easy, but you have to recognize when it changes, and it changed this year, and people are still stuck on last year's habits, and those are the people that are going to learn the biggest lessons out of this.
I love it, Brian. Great run through there. So you kind of mentioned the harder work that's going into that. Is that the number of charts you're scanning? Is that the attentiveness to monitoring it? What's really been like the main pieces that have changed?
The number of charts never changes. I mean, I look at a shit ton of charts. That's just my process. It's where I get my edge is by looking at the individual components rather than doing scans and telling the market what I want. It's more about looking at on a weekly basis. My master list is about 940 stocks right now. I go through every one of those on 6 time frames, and I don't intend to trade, probably more than maybe 10 of those names, but it gives me a much better feel for what's happening underneath the surface rather than telling the market, okay, show me the stocks that are above their 20 and 50-day moving average. They've pulled back 3 days on lighter volume. That's a good shortcut, but it's not going to tell you actually what's happening underneath the surface. So that has remained the same. What's been more work for me this year is that I've had to pay more attention to the shorter term time frames. That's not my goal. I don't like trading off of 1-minute charts, but you know what? That's where the opportunity is. I've got to adjust because the market's not going to adjust to what I want. So I have to be looking at 1-minute charts and, paying closer attention than my ADD allows me to, and more than I want to, and just being tighter about my risk management, being quicker to take that first third off, and making sure that I ratchet my stop up immediately because we just are not seeing follow through in most names.
Got it. Awesome. Well, I appreciate some of the ones you listed out there. I was listening. Would you mind? I know you kind of ran them quick there, but I'm just adding some of these onto just some watch lists. Keep an eye on. I know you said MGM on the short side, CAL on the long side. There's another one started with R on the long side there.
RFP. Yeah, it's pulling back today. It probably needs another day or two at least to settle down. I certainly wouldn't buy it when it's down like this today, but it was an important breakout. Big volume move here a couple days ago, which I didn't even look if that was earnings. Resolute Forest Products. No, earnings were back in mid-April, actually early May. They're a lumber company, Canadian lumber company. What else did I say? I mentioned METC as an energy name and NRG as an energy name. I don't think I mentioned WOW, but that one looks good. WOW. It's probably got to clear the high of this week, which looks like it's at about 22.16 or so. That one has the potential to get going. It's just, consolidating here. It's worth watching. It's, what I do with a stock like WOW is I don't watch it. because it needs to clear the high of this week, 22.16. So I'll set an alert at $22 per share, and the alert that I'll set at 22, I'll look at that alert tomorrow and say, hey, wait, the stock's down at $20.80. The stock's broken. I'll just take it off my list. But if it maintains within a range and it triggers up to 22 tomorrow, then I'll look at it and say, well, what's going on here? Are we seeing a surge in volume, or what's happening with this stock? And then I'll reset my alert to 2208 maybe. And then if 5 minutes later it triggers, I'll say, well, maybe something's going on here. I'll pull it on my level 2 screen, see what the activity level is. Are we getting ready to break that range, or has it come too far too fast? So that's just, and if it starts to back off, then I'll reset the alert at $22.14, 2 pennies ahead of the level that I might want to buy a breakout past, just to keep me interested in the name and make sure that if I'm not watching it as I cycle through my stocks during the day, that I don't miss it. So it's about, anticipating and being aware, but not getting not coming in and saying, I really like this stock. I'm just going to buy it here at 21.46 because I think it's a better deal. There's no momentum in it, so there's no reason to buy it until it can, firm up and then get going.
Okay, perfect. Thank you, Brian. I've got a couple follow-up questions, but I want to bring in Richard too. Richard, Brian just kind of ran through a really interesting list of names there in some different sectors. I'd love to see if you have some that you're interested in putting out there too that are on your watch list.
Yeah, sure. There's some that are still holding up decently well. TMDX in the kind of medical products area is still holding pretty tight here. Also, RRC in the oil and gas areas is holding that 10-day moving average. Pretty strong closing range today as well. Not too high volume on yesterday's reversal. That might need a few more days to build out. Other than that, PLAB in the kind of semiconductors area has had a really explosive move upwards and now is pulling back into that 10-day moving average area. So this could also be a one that if it goes sideways for a week, that would set up a pretty nice setup. But that's pretty much what I've got to the long side. A lot of stuff has kind of fallen through to the downside recently. CELH is holding up reasonably well, right near its 200-day moving average. You do have the downside reversal on the 6th, but overall it's holding up that range. So the high on that day was 71.81, and you could also watch kind of the 70.56 area, which is the high from just yesterday on Wednesday. So those are the few names to the long side that I'm watching that are holding up pretty well above those moving averages and in their structure.
Okay, perfect. All right, follow-up question that I want to send to both of you. Richard, maybe you want to touch on this first, then Brian.
Sure.
And this came from the audience, so thank you to the audience who did submit this. They asked for opinions on the VIX here. The comments that we're making do sound fairly bearish at the moment, and the VIX is around 25, is what they were saying. So with the VIX around 25, is it perhaps a good time to buy a leverage ETF with the view of the market going back to 30 plus? I guess you don't have to really answer the direct part there, but just views on the VIX at these levels.
Yeah, I don't look at the VIX too much. It's just kind of a measure of volatility for me. And if it's elevated, then it's going to be tougher to position. You got to keep those entries tighter. Risk management is even more important. Maybe use overall lower position sizes, but really nail down that entry is the most important thing when we've got an elevated volatility, because that's kind of your best defense, is buying right at that specific point where you want to, and then managing risk carefully from that side of things. As I said, I don't look at it too much. I just kind of know when it's elevated. You'll see it in the action of the stocks too. Stuff is going gapping up, gapping down, all of that. And it just tells you that you got to be a little bit more careful and specific with those entries.
Any thoughts on the VIX, Brian?
Yeah, I pay almost zero attention to the VIX. To me, it's the Wall Street's most misunderstood product. I've never seen anyone really be able to consistently use it to find an edge in the market. For me, it's always about each stock based on its own merits, and you start to confuse it with, well, what's the dollar doing? What's the VIX doing? Then you start to add too many things. It just complicates the issue, and you're better off focusing on how can I best get into this long or short idea at the time when the momentum is just beginning, and then manage my risk. And if you've, with the stop that's close enough by, so you're not going to get your ass handed to you if you're wrong. And regardless of what the VIX is doing, that's always my approach.
Okay, perfect. Got it. All right. Stock market news. I wanted to just pull to you for a second, if you are free to speak, just to see if you have any general questions. I have a couple more questions on the market here, and thank you to those that are submitting. Any questions that you have through the bottom right, you can just drop them right into that Spaces chat where you see that little number 4. But stock market news, anything on your mind you want to put out there first?
I am actually currently watching live Lisa Su, AMD CEO, talking about AMD at their investor conference. That's kind of making me think. I would love to hear any thoughts on semiconductors as a whole. Yeah, maybe any plays there, any maybe short side plays there. But yeah, love to hear anything like that.
The only two that I'm really looking at are ADI, which is starting to fail again. It needs to get above 169 to really get going, and it's being quite reluctant to do that. It's been holding above the volume weighted average price from last year's high, and it's got a rising 20 and 50-day moving average. AMD is starting to firm up a little bit, but that 50-day moving average is still declining. And 51 days ago, was March 28th when the stock was 120, and then it had two more. So that 50-day moving average is going to take 3 to 4 days at least to flatten out. So I think it's still too early on AMD. The real leaders there have been what is it? NXPI actually was trying to lead today, but that one has a better looking chart than AMD. It has a better looking chart than NVIDIA, and probably the best one is ON, and that's just pulling back from a run. So probably early to mid next week, that's probably worth looking at to see if it could continue to move higher. So ON, NXPI, and ADI are the ones that I would have an eye on in that group, and some of the other ones just have had too much damage. They're going to need more time to heal.
Yeah, I was also going to say ON, and then also I mentioned PLAB. Photronics is a name I'm watching in that space. It might need a little bit of time to base out here, consolidate, but it's had a really powerful move off the bottom on large volume and consolidating on lower volume. So I'm watching that one as well.
Yeah, that's a nice one too, Richard. I agree.
Very nice. Someone just asked that, are we paying attention to any earnings? It's not really earnings season right now. I'm looking at DocuSign for potential downside. Have you looked at that at all, Brian?
I believe DocuSign is in a horrific downtrend, right? DOCU. Yeah, I mean, it's had a good little bounce. It's right at its declining 50-day moving average. One of these earnings due, I guess, today. I wouldn't be surprised to see a negative response to the earnings. That's what happened. Look at where we were, last earnings report. I just looking at the chart, I'm assuming that was March 11th. And that was, so that had to have been earnings there with that big gap lower. I don't think you'll see something as dramatic as that, but it's in a primary downtrend. And again, if it bounces, I can't see it getting up more than 100, which would be a great trade if you're in it. But that's the year-to-date VWAP. I think the risk is to the downside here, especially since it just came off of $66 a share, 3-4 weeks ago.
Yeah, Richard?
Yeah, I'll just steal a question in here, sneak one in here. I was watching BTU earlier this year, or not this year, this week here, for a breakout around that 26.97 area. But we had that gap up on Tuesday, which kind of nullified the trade for me. I don't like trading those gaps, especially when we're in a really volatile environment and stuff just kind of likes to reverse here. So, Brian, I heard you mention that earlier that you're eyeing a different stock, and also the gap kind of nullified the setup for you. So I wonder if you could kind of talk about how you trade gaps and kind of why you don't like to chase them when they do gap up through your buy point.
Yeah. So BTU was actually a watch list for me, for subscribers, that is as well. The one that I had mentioned was Diamond Offshore, and Diamond Offshore gapped up on Monday and then, had a really big run. One, I wasn't interested in it. I looked at it, I said, well, it's an energy name. I'm not, maybe some subscribers will get involved in this. There was an opportunity for an entry there if you're paying attention to the shorter term time frame. And this is going to be part of the chapter on gaps in my forthcoming book. But I wrote an article, I think in 2008, called Chase the Gap or Wait for VWAP. And it refers to this type of play specifically. And what you saw happen on Monday in Diamond Offshore, I'm just going to post this just by itself on Twitter right now with nothing. It'll confuse some people, but that's okay. What you saw there is that's a 2-minute chart of Diamond Offshore. So you saw that it gapped up, and you see I have a volume weighted average price there. And what the article was, again, is chase the gap or wait for VWAP. And what it simply refers to is, some people buy above the opening range, which would have been above that first, the high of that red candle. I like to get involved as it breaks that, the fourth bar there. You can see it got back above that volume weighted average price for the day, and that volume weighted average price was flat at that time. So to buy as it gets back above the volume weighted average price for the new session, along with a stop below the low of the session, is the way that I will trade these, given it's not an energy name. Otherwise, if this was what I consider a normal supply and demand type stock, then that's how I would have traded it. And that's how I suggest that, for subscribers, that they buy it right there at that $8.35 or whatever level that was.
Yeah, that makes a lot of sense. And yeah, I see exactly what you're talking about as it retakes that VWAP. And yeah, I usually look at a 5-minute chart, not a 2-minute, but going a little bit higher resolution, you get a little bit more of a sense of the price action. It kind of builds out a little bit of a structure and then pushes through. And then obviously you get the opening range a little bit higher, 846. So yeah, that's interesting.
The problem with that, on a gap day like that, is that when you won't see the same VWAP development on 5-minute candles, because by the 10th by the time the second candle was formed, the stock was up at 865. Whereas, looking at it, so I think that when it comes to that entry, the more granular you can get, the better, just to get the entry. Then go manage risk from a 5-minute time frame. I'll even use a 1-minute time frame for the entry. If it's within the first 10 minutes of the day, I'm not looking at a 5-minute candle chart yet. I'm looking at a 1-minute for that day to see how it fits in with the 5-minute from the previous day or the 10-minute from the previous day. But today's action, you need that granularity right from the start to get that accuracy.
Yeah, perfect.
Cool.
What, Brian? Are you got a hard stop here at 350?
I can go to about another 5 minutes, actually, because I do have to get out of here quick this afternoon.
Yeah, no worries, no worries. Okay, one other question I had is just wanted to get your continued thoughts here on using SARK as either a hedge, against longs, or just continuing to play it for this market. It's having a little bit of a downtrend here, but it, just hit new all-time highs just a couple weeks ago.
It's not what, I'm not a believer in hedging. My hedge is my ability to get in and out quickly and to manage risk on the trades that I'm involved in. I think we spoke about maybe last week or the week before. Only occasionally do I do a little bit of hedging, and that is on the downside. If I own puts and I see the stock looks like, hey, maybe we're going to see a rally for a couple hours, rather than, sell my puts and give up the spread and all that stuff, I'll buy, maybe 50% of the, let's just say I have 10 puts, I might buy 500 shares of the stock to kind of, scalp a little bit on the long side. And hopefully I'm not losing much premium as well. But SARK isn't, I think it's a better speculative vehicle than a hedging vehicle. If you're hedging with SARK, it means you own some garbage in your portfolio, and you should have been just managing risk earlier in the as the stocks were declining.
Got it. Got it. Richard, any thoughts on it? Use it all?
Yeah, I forget where I heard it, but I think I've heard from a few traders that if you're thinking about putting on a hedge, you should probably sell something like that. That's pretty much how I manage risk. Is I sell down my positions. Obviously, if you're an investor trying to stay invested all the time, then maybe it's more of a more useful strategy. But if you're a nimble trader, most likely it's better to kind of go to cash, build up that cash position versus trying to find a hedge and try to get fancy. Keep it simple. Sell some down to the sleeping point and manage risk that way.
Okay, got it. All right. I mean, I think that definitely covers a really good amount here. I like that we touched on, semis and a few other areas. One thing which is, still pretty polarizing, Brian, I would just love your thoughts on the chart, is the Tesla chart here. Kind of been traversing sideways for the last week. It's literally just down $8 exactly over the last week, $8.50. Kind of trying to maybe build up on this $700 level. Has resisted, unlike some others, has resisted some of the downside pressure and is obviously still up on the year, 20-ish%. Well, that's full year, not just this year. So kind of want to get your thoughts here on this, and then maybe any of the others that are factoring into it, like RAVN and some of those others that I think we talked about last week as a short.
Yeah, I don't feel compelled to trade Tesla. To me, it's, and again, go back to the stocks I had mentioned earlier. Most of them you'd probably never heard of. I'm not the crowd follower that, I don't have to trade the popular stocks. There's more to the market than Tesla, Apple, and Nvidia and AMD and those names. So, if it confuses me and I'm not sure what to do with it, I mentioned that in a tweet yesterday. If the market is telling you that things aren't clear, it's actually sending the clearest message that it can send, and that is just avoid it. You don't need to make sense of it. If it doesn't make sense, just let it be. Leave it until it does make sense. But the trend is lower. It's below it. It's got a declining 20-day moving average. It's got a declining 50. It's got a 200 that's flattened out. The relevant volume weighted average price here, for some reason, has been the January of 2021. If you put that on there, you'll see what I mean. That's been, and we're below it, and it's declining now. I think that the sellers are in control, and you're getting some bounces in here yesterday and today. If this ends up being a failed bounce attempt, which it looks like it will be, then I think you're headed back down. I think it's inevitable we hit the COVID VWAP, which is down at about 550.
Got it. Okay. I think that's it's a bit of a steep drop from where most are probably, because I think a lot of people have been. I know that the COVID VWAP is up at 550, but I got to take a look at Tesla real quick just to see where it started. It was all the way down at, I guess it's like pre-splits if you look at it, but I mean, this stock was at under $100, right? So a ton of people, that means, have been buying really high up, right?
Yeah, I mean, every single stock goes through these cycles, and it's the most surprising part to me is that it surprises so many people when their favorite stock that they think is bulletproof just does what normal, undergoes the normal market cycles that again go through how long were oil stocks just garbage that people gave up on, and now they're having their moment in the sun, and maybe tech is going to be given up on for the next 2 years. It's not a prediction. I'm just saying, that be prepared for that. What would happen if you've got all your money invested in tech and you think it's coming back, and instead for 2 years it goes sideways? They'll probably scare you out right before they start to move higher again. And again, there's no need for that. Manage risk. It's got prior support at 800 that was broken. It looks like it was tested last week. It held as resistance. If yesterday and today's rally attempt or failed here. From failed moves typically come fast moves in the opposite direction, meaning it's likely to get hit hard.
Perfect. Richard?
Yeah, I think if you didn't know it was Tesla and you looked at the chart, it's not what you would focus on. It's already had a run of 2,000%. It's now below the moving averages, below the 200-day moving average, and yeah, in the short term, it's forming a potential higher low. But we've got a big downside reversal today. It could go, outside day here. We'll see if those lows hold from 6-7. And back in 2020, when it was making that tremendous run, it was part of an overall group that was super strong. The auto manufacturers, the EV plays were, it was a theme that was working. Right now, there's not really that theme. So right now, it's not in favor. It's below the moving averages. It's already had a tremendous run. People love it because it made them money in the past, but it doesn't necessarily mean it can't go sideways and base out or even undercut those recent lows and go back to the anchor VWAP from those COVID lows, which also kind of line up with the high of a base that it made back in September and early October of 2020, where the high of that is about 509, 512. So that'd be an area of interest that I'd look, to the downside if we do get it there. But if it's going to go to 5,000, it's going to have to break through all these recent highs, all that overhead supply, and break through that 1,258 or whatever mark that is, and then it can be another rocket ship. But until then, there's better opportunities to the long side. If you're looking to the short side, there's definitely some good setups developing here. But yeah, if you didn't take if you took the name off the chart, would you trade it? I think that's the big question you want to ask yourself.
Perfect. I love that thought pattern right there. Awesome. Brian, I know we're running up on time here for yourself and Richard. Any other comments, thoughts, for retail advice?
The market is pretty choppy, and the primary trend is lower. News and surprises tend to follow the direction of the trend. Don't be surprised by what surprises most people, which is more likely continued lower.
Got it. Got it. Awesome, Brian. Really appreciate you coming on and sharing time. If anyone's not already following Brian, he's one of the top follows here on Twitter. In fact, somebody said it, Brian, in our chat. Someone said, "Wow, at Alpha Trends, best trader." Thanks, Christian. I think you summed it up pretty well.
Thank you, everybody. Thanks for having me on again, Gav. I always appreciate it. Good chatting with you, Richard, and be well, everybody. Thank you.
Take care, Brian. Richard, anything else you'd like to say on this one before we roll into earnings?
Nothing too much. I got to hop off too, unfortunately. But yeah, if you're being involved in this environment, be nimble, manage risk always, and be patient as well. Wait for those prime setups. You don't get paid for just taking trades. It's the ones that are actually good setups that are going to make you the most money at the end of the day. When you've got that theme lining up, you've got the market behind you, the overall group is setting up. That's the ideal scenario, and we're just not seeing a lot of that right now. So less is more right now, at least in my opinion.
Yeah, I think you made some great points. Damn, Richard, you're coming with all these quotes in like the last 3 minutes here. Someone's gotta cut this piece for you.
If you have me on every week, I'll come up with better and better quotes. I hopefully improve each time. So cool.
Love it, Richard. Take care, man.
Yeah. See ya. Talk soon.
Absolutely.